Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Tuesday. It is Tuesday. It is the day after President's Day. We're coming in after a holiday weekend. Hope everybody had an absolutely amazing weekend. Welcome to the Daily Market Commentary. I'm your host, Chuck Fulkerson. We're going to do what we do each and every trading session here on the Daily Market Commentary. Take a look at our futures markets, identifying potential breakout trades and reversals from an educational perspective. So let's go ahead and dive right in. Starting with the S&P. So this morning when I look at the S&P, we're down about 4 points. And the 4 points that we're down this morning, I don't really, because this was a holiday session, I don't really consider this a super big breakout opportunity because of the sideways chop. Those are not really any of the areas that I'm really looking at for a breakout. Normally if I saw this kind of price action, then I would look for a good breakout potential up above this region, which is still very, very possible, right? I mean, there's nothing saying we can't look at this as for a breakout potential. But what I'm going to say right now is it's probably better to just not trade that as just a breakout, because though it fits our structure, we've got to also consider the context, right? And the context is that occurred over a holiday weekend where the volume just wasn't there, right? The volume wasn't there to support it. And without the volume there to support it, it may not give me the follow-through that I would need on a traditional breakout. Now, if you are so inclined, I don't think there's anything wrong with trying to give it a go, depending on your risk tolerance, but I think you're better off looking for the potential reversal. So for today, the level that we've identified is off of a 15-minute chart. Now, I know that because it's in purple, right? The purple lines tell me something that is a 15-minute level. And we've got two levels here that are stacked one on top of the other. And that would be the area that I may consider for a potential reversal, would be somewhere down in here. Both of those levels set themselves up as potential reversals. So if that's too wide of a level for you, if you don't want to give that full level the ride, then just take the lower level, which would be just this area right here. So the lower level would be just this 48 by 52 region. Now the lower level was formed fairly early in the day, which is pretty strong probability. Now, and the level up above was just before this parabolic move up. And so one of the things that, if you guys are regulars to the room, that I talk about is that oftentimes we'll see these speed candles, if you will, get retraced. And then price tends to move back in the direction of that speed candle once that retracement begins. Here's a good example of that, right? We had a speed candle down, it was retraced, and then it moved back in the direction of the speed candle. Well, that's kind of what we have here. We have a speed candle right here that may get retraced and then continue to move back in the direction of that speed candle. Now that on a 4-hour time period would just be a little tiny pullback, right? That's not even a very big pullback when we look at it on a 4-hour time period. Now, I don't typically draw trend lines, because my problem with trend lines, for those of you that are regular viewers or those of you that are subscribers, we talk about trend lines, and I hear people say, oh, well, you can draw a trend line, and you've got to have 2 touches to confirm a trend, or 2 touches to draw a trend, and then 3 to confirm. Well, if I've got touch 1 down here at the bottom, touch 2 right there, then I could draw this as a trend line. Oh, wait a minute, that means we've broken the uptrend. So let me draw this as my trend line. Right? Oh, wait, that means we've broken the uptrend. Oh, wait, let me draw this as my trend line. My problem with using trend lines, and if you do that, just be aware that when you use a trend line like that, you're subjective. It's very subjective to how you start and where you put that trend line. I would prefer to use the fact that we've got higher swing highs and higher swing lows, and just get rid of the concept of trend lines being what controls price, because trend lines I've heard trend lines being considered demand on an angle. And I don't really consider, demangle, if you will, because, if I did this, then, taking a look at this price pattern, this is a rising wedge pattern, right? And a rising wedge pattern is an extremely bearish pattern. And there's nothing to say that this is not a bearish pattern. I'm just not willing to short it. If, at this moment, what I will take a look at is the fact that when I look at my momentum here, when I throw in my 4-hour momentum indicator, we see that my momentum indicator is telling me that I have roughly the same highs in momentum while I have higher highs in price. Now that is bearish divergence, right? That's definitely a divergence in momentum where we've got price, these going higher highs and these going the same or lower highs tells me that there's some bearish divergence. There is a conversation to be had that there's some weakness in this market. I'm not willing to short this weakness as of yet, but because frankly we had bearish divergence here, right? Look at this. We had it right here as well, but we didn't come into a strong enough supply level. Now, it gave you a good little pullback opportunity to buy on a pullback, and that's all I'm looking at right now because that's what the market's giving me. I am in no way a perma bull or a perma bear. I would much rather take what the market gives me, and in this case, I'm still looking at demand levels below current prices, potential reversals. If you notice, all of my close supply levels are confirmation supply levels, meaning that I've got lower probability above me in that confirmation areas than I do down below me for potential reversals. Okay, so there's our S&P. NASDAQ, so looking here at the NASDAQ. So this is the NASDAQ level. Now, we talked about this as a potential breakdown point in our live trading room. I guess it was Sunday night. We looked at this as a potential breakdown for anybody who was interested in it on Sunday evening. And really, we were looking at it on a 15-minute chart. And it was just this, when we were looking at it, it was actually just this area right here. And I said, if you are so inclined, you may get a breakdown below these lows, and that may be an opportunity to get short. And we hit it again yesterday morning and then popped up through it, and now it's just kind of chopping still sideways. So this, if you do believe in the short, I think the NQ breakdown below this area is the short to look at. Crude oil. So in crude, looking at our 4-hour chart, our 4-hour definitely at this moment has me being more of a buyer than being a seller. If we do get a little bit of a pullback, I think there's a good opportunity here. For those of you that are interested, I think you could even take a breakout, especially if we get one more touch to this area and we base in front of this level. I think that this could be a breakout area below here. You could also get a reversal back into this zone. Gold, we had a really nice setup on gold last week that came to fruition. For those of you that were able to catch it, great. Leave me in the comment section below letting me know. It's continuing its move higher. So if you're still riding the gold trade, great. If not, we identified one little area down in here off the 15-minute chart. However, we've moved away from that considerably over the last couple of days as price has continued its march higher. So if I go to the 4-hour in gold, I think there's room for this to kind of continue its run higher. Next, bonds, Aussie, Euro, and Canadian. So in our bond markets, most of our currency trades was a lot of hurry up and wait, and that's kind of still what we have in place. So we have another one of those speed candles I talked about, a little bit of a demand level right down in here. Price rallied up. We didn't retrace the whole area, and we may not wind up retracing the whole area to allow us to get back in. But for now, there's really no supply for me to kind of lean on up above, and there's no demand down below. In the Aussie, we had a breakout level up in here. Yesterday, we came back into this level. We hit it 1, 2, got a nice pop out of the level, and actually, look, you can see it more on a 15-minute chart. Came into it, opened up, popped right out of the level to the opposing zone, and then sold off pretty hard. And then the old area of demand became supply as we came back up into here and sold off from that region. Now, this is the retrace of a breakout that we had earlier last week. And so let me actually move this up to a 5-minute just to kind of show this. This was the green candle was really the only price movement that we had that was worthwhile on this. So it did move out about 2 to 1, but there's a chance maybe that you didn't get the full profit target on this. It did move out 2 to 1, got a little run, came to its just about its fair area before then selling off. And now we're kind of continuing our next leg down. So since we're continuing our next leg down, when I look at this on a 15-minute chart, I'd be okay if somebody wanted to short it now, right? Meaning that we have come back up into this little area of supply and price is starting to drop. If you are not, and hopefully I'll have this out before the breakout occurs, you could take a breakdown below this line here. Guess it really matters how fast this video renders once I hit the stop record button and process it. In the euro, a lot of sideways price action that I'm just not interested in trading any of this. My next level doesn't come into play until somewhere up in this region here. This is the 6E level, and that would be this this little bit of basing right in through here. You know, the reason that we chose this one over some of the others is that when this level was created, pretty good time of the day, nice move away, and this area here is really a retest, not a retest, but there's probably a number of trades left because of all this fair price value area here to the left. Now, could we go right through that? Sure, but it's a fairly small little level, and there's nothing in between here and there that I'm going to lean on at the moment. Canadian dollar, very similar in the fact that we're between areas of demand and supply. I've got a really nice level. I like this level up here a lot. This is one of my best levels on the charts. This is a strong move down after kind of that triangle pattern that I draw a lot. I look for those triangle price patterns a lot, and I don't necessarily, lean on the demand or supply of it at an angle like I talked about earlier. However, those price patterns do mean some things to me. So this is the area that I see for a potential reversal. If you wanted to trade a breakdown, we're actually getting a decent price action for a breakdown right here. If indeed you wanted to try a breakdown on this 1 hour level. Last, certainly not the least, Great British Pound, Japanese Yen. Japanese yen, we actually just had our breakdown from our live trade room. So those of you that were in our live trade room, we've gotten a pretty nice move down. Our breakdown would be below this area here. Our stop would go above this pivot. We've now moved about a 1-to-1 reward to risk. I think there's still room for price to keep running. So maybe it's time at this point to look to moving your stop down somewhere down into this region here just to lock in. Just to make it a risk-free trade, as that one is continuing to move down nicely. And then in the Great British Pound, we have a level up above us here, a little bit of basing, pretty nice move away. That would be our next kind of reversal point in the pound. We do have this strong parabolic move higher, which I think we can expect some sort of a retracement through. However, I would have to wait for price to break below this area of demand and really make that more of a breakdown below that demand area. I'm not going to try to take this demand area again. It would have to be kind of a breakdown below this demand area for a short if we come back down into that region. So hopefully that those all make sense. And if you've got any questions, please send me an email, support@tradersarmy.com. Thank you guys so much. I know we went a little bit longer today than usual, but I wanted to spend a little bit of time detailing that, especially those equity markets and the S&P. For those of you that are fairly new, go to tradersarmy.com. Use the promo code TRADEUP. If you want to try us, give it a whirl, see if you like it. $60. It's 60% off your first month. So save yourself a little bit and see if it makes sense to become a member. So all right, everybody, hope you're having a great day, and I will see you soon.